We earn our salary in dollars. If you look at the US debt and deficit, it's unsustainable. People need some exposure to an alternative. Bitcoin is the best of those alternatives. It's the fastest horse. I'm not telling my friends and family to put 50, 60, 70% of their portfolio into Bitcoin. But right now, they're 100% dollars and 0% hard assets. I think having a few percentage points in Bitcoin, historically, it's been good for returns. Historically, it's had low correlations. I think it's a good investment bet. I think we'll get there on an international basis long term, but we don't have to get there for Bitcoin to be extremely valuable. Bitcoin could be worth more than $1 million per coin, even just to get to par with gold.
Bitcoin is exploding past expectations, surging to new all-time highs with nearly 8% gains in just 7 days. This rally is being powered by massive momentum, a record-breaking $1.17 billion in ETF inflows in a single day, and over $570 million in short positions wiped out. With bulls holding strong above $114,000, analysts now eye $125,000 as the next major target before July ends. Behind this momentum lies a deeper shift, one that goes far beyond charts and candles. As the US debt and deficit spiral into unsustainable territory, more people are waking up to the fragility of fiat. Relying on dollar-based assets, salaries, bonds, stocks, now feels like building on sand. In today's economic chaos, Bitcoin is stepping forward as the modern escape hatch. It's not just a speculative asset, it's a counterpunch to inflation, manipulation, and centralized control. Dubbed the fastest horse among hard assets, Bitcoin offers powerful upside even with a small allocation. It's uncorrelated, it's digital, it's borderless. And it's become a hedge not just against market volatility, but against a broken system. As trust in traditional finance erodes, Bitcoin isn't just gaining price, it's gaining purpose. The revolution isn't coming, it's here. And every dollar higher is one step further from fiat's grip. Before we continue, please don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the rest of the video. Some predictions even see the price reaching $135,000 or higher later in 2025, driven by institutional accumulation and growing adoption. Matt Hougan, who has been vocal about Bitcoin's role as a hard asset, points out that even a small allocation to Bitcoin can make a meaningful difference. He believes Bitcoin doesn't need to replace global currencies to be valuable. Reaching parity with gold alone could push its price well above $1 million per coin. Now, let's get back to the video.
The bigger piece is just massive, unrelenting demand meeting limited supply. We're seeing companies buying huge amounts of Bitcoin and ETFs purchasing huge amounts of Bitcoin, and there's just not that much Bitcoin to go around. I'll mention in the last 30 days, we've seen Bitcoin ETFs acquire $5.2 billion of Bitcoin. That represents institutional investors making a giant allocation to this space. We see that trend continuing. And with the limited supply of Bitcoin, it's just forcing the price up. I think we're detaching from $100,000, and I think we're going substantially higher from here.
When you say substantially higher, Matt, give me some bogeys to watch.
Yeah, absolutely. I think once we break the gravity of around $100,000, where we've been trading in and out of for the last 6 months, I think it's sort of anyone's guess where we go. Here at Bitwise, we expect Bitcoin to top $200,000 by the end of the year, which I know sounds like a very large number, but the flows we're seeing from institutional investors and corporations are really significant. They're accelerating, not slowing down, and I think they're going to force that price substantially higher.
All right, 200,000, it's on the board. Meanwhile, Matt, Congress kicking off crypto week. What are your expectations there?
Yeah, absolutely. That's the other piece of the story. At the same time as you have this institutional allocation, you have very positive news from Washington. What we're hoping to see is the Genius Stablecoin Act, which passed through the Senate on a bipartisan basis, get through the House, onto the president's desk, and signed. That'll help Wall Street move into crypto in a major way. We're also hoping to see the Market Structure Act, called the Clarity Act, make progress through Congress. Those are the two big pieces of legislation. If we get those done this year, crypto is on an extremely strong footing. You're going to see, again, Wall Street make a major move into the space. You're going to see much fewer risks of blowups and fraud and negative events like we saw in the past. It's going to be a very strong foundation if those happen, and I think they might even this week.
The main story in the Bitcoin market right now is massive, constant demand running into a limited supply. Matt Hougan explained that companies and ETFs are buying huge amounts of Bitcoin, and there simply isn't enough to go around. In the last 30 days alone, ETFs have acquired $5.2 billion worth of Bitcoin, which shows just how much institutional investors are allocating to this space. He noted that this trend is not slowing down. In fact, the buying pressure is only increasing, and with so little new Bitcoin available, this is pushing prices up fast. Matt Hougan said he expects Bitcoin to break free from the $100,000 range, where it's hovered for months, and move much higher. He shared that Bitwise expects Bitcoin to top $200,000 by the end of 2025, and although that sounds like a big leap, the current pace of institutional and corporate buying supports such a move. He also pointed out that once Bitcoin moves past the $100,000 gravity, it's hard to predict exactly where it will land, but the flows from institutional buyers are so strong that a substantial price jump is likely. He additionally mentioned that Congress is playing a key role in this story. He said the Genius Stablecoin Act, which has already passed the Senate, could soon become law and make it easier for Wall Street to move into crypto in a big way. There's also the Clarity Act, a bill designed to create clear rules for digital assets, which is making progress in Congress. If both pieces of legislation pass, Hougan believes the crypto market will have a much stronger foundation, with fewer risks of fraud or blowups, and even more institutional participation. He expects these regulatory changes could even happen within the week, further fueling Wall Street's involvement and supporting higher prices. Let's watch more clips from his interview.
It's become a two horses pulling this cart. The ETFs are still doing their part, but you're absolutely right. These companies are buying even more. For context, Bitcoin companies bought about 160,000 Bitcoin in Q2 alone. That's 100% of the net new supply of Bitcoin that will come into the market this year. So in one quarter, they bought the entire year's worth of supply. I know a lot of people out there are skeptical of this trend. If you're on the inside and you're seeing the proposals for new deals flowing into your inbox, you know that Q3 is actually going to probably be an even bigger quarter than Q2. So this is a trend that I think actually accelerates before it plateaus and maybe tails off at the end of the year. But I would expect significant buying in Q3 from this sort of quadrant of the market. The way I think of it is fairly simple, which is most of us are 100% exposed to dollar-based assets. We're exposed to stocks, we're exposed to bonds, we earn our salary in dollars. If you look at the US debt and deficit, it's unsustainable. People need some exposure to an alternative. Bitcoin is the best of those alternatives. It's the fastest horse. I'm not telling my friends and family to put 50, 60, 70% of their portfolio into Bitcoin. But right now they're 100% dollars and 0% hard assets. I think having a few percentage points in Bitcoin, historically it's been good for returns. Historically it's had low correlations. I think it's a good investment bet, but it's also insurance against that fiat risk. I think it makes a lot of sense.
What about as a medium of exchange, Matt, a currency?
Look, I think we'll get there on an international basis long term, but we don't have to get there for Bitcoin to be extremely valuable. Bitcoin could be worth more than $1 million per coin, even just to get to par with gold. And when's the last time you bought a cup of coffee with gold? Look, I do think Bitcoin has medium exchange characteristics. I think we'll get there in the 2030s, but Bitcoin's going to have to be priced $1 million or above before that's even really in play. You get all that as extra upside on top of this store of value investment. It's like a free option that you get for a core investment with, in my view, a high probability of success and significant sort of 10x style upside. I think that's what you get with Bitcoin.
The current Bitcoin market appears to be driven by two major forces: ETFs and direct corporate buying. In the second quarter of the year alone, companies acquired around 160,000 Bitcoin, roughly equivalent to the entire net new supply projected for all of 2025. This suggests that in just 3 months, institutions bought what would typically be released over a 12-month period, highlighting the strength of current demand. While some remain skeptical about whether this level of buying can be sustained, insiders are reportedly seeing even more proposals for new deals, raising the possibility that Q3 could outpace Q2. This trend may continue to accelerate before eventually leveling off toward the end of the year, with ongoing strong demand expected in the near term. From an investment standpoint, Bitcoin is increasingly viewed as a hedge against fiat currency risks, particularly by those whose portfolios are heavily weighted in dollar-denominated assets like stocks and bonds. Beyond its role as a store of value, Bitcoin is also being considered a potential medium of exchange in the long term. However, broader adoption for everyday use may not occur until the 2030s, and likely only if its price rises significantly, possibly into the $1 million range. For many investors, the potential for such price appreciation is seen as a valuable upside to Bitcoin's core use case. Overall, the market reflects a combination of strong institutional interest, constrained supply, and optimism about long-term adoption and price growth. Let's watch more clips from Matt Hougan.
Why is Bitcoin shooting higher right now?
Yeah, thanks for having me on. I think it's a really simple answer. There's unrelenting demand from corporations and institutional investors, and that's colliding with severely limited supply. The Bitcoin network only produces 450 Bitcoin per day. Yesterday alone, Bitcoin ETFs bought 10,000 Bitcoin. This institutional investment into Bitcoin is a one-time event. It's going to take years to play out. But I think over the course of those years, there's going to be this persistent bid where there's more demand than there is supply. And the natural response to that is what we're seeing in the market, which is Bitcoin's price goes higher. I think it has a long way to go. I think it could end the year closer to 200,000. So I would get used to this story of new all-time highs.
Nice.
Bitcoin's recent surge is mainly due to strong, ongoing demand from large companies and institutional investors, while the available supply remains extremely limited. The Bitcoin network produces only about 450 new coins each day, but demand from institutions is far outpacing this. Just a few days ago, Bitcoin ETFs alone purchased 10,000 coins. This kind of institutional buying is a major shift for the market and isn't expected to be a short-term trend. It's likely to continue for years as more companies and funds allocate part of their portfolios to Bitcoin. This creates a situation where there are consistently more buyers than new coins are being created, which naturally drives the price higher. Market watchers are seeing this as a one-time event that will reshape Bitcoin's price trajectory for a long time. With demand so much higher than supply, price increases are happening quickly, and many analysts believe this could continue for some time. Experts like Matt Hougan expect Bitcoin could reach $200,000 by the end of the year if this trend keeps up, and new all-time highs are becoming a regular occurrence as a result. This pattern of unrelenting demand meeting a fixed supply is what's fueling the current rally and making Bitcoin one of the most talked about assets in the market right now. Meanwhile, Coinbase reports that Bitcoin's current bull run stands out from previous cycles because price movements have become steadier and less dramatic, resembling the more gradual rallies often seen in traditional stock markets.
Bitcoin's recent bull run looks a little different than previous ones. Gone are the days of wild price swings, keeping traders awake at night. Now, prices climb steadily, much like the boring bull runs in stock markets. The shift aligns Bitcoin with Wall Street, where the VIX index, often called the fear gauge, measuring the 30-day implied volatility, tends to decline during bull markets. Volmex Lab CEO Cole Kennelly told CoinDesk that Bitcoin's record highs amid declining implied volatility suggest a shift away from the usual positive correlation and a move toward traditional financial market behavior as the crypto landscape matures. Looking ahead, one key risk that could derail Bitcoin's momentum is the U.S. inflation data that's due on July 15th. As of this morning, Bitcoin was at around $117,700. The bullish momentum in Ether continues after the token's strong performance in Q2 of this year. The second largest cryptocurrency by market cap surged above $3,000 during early European morning hours. Accelerating institutional demand through spot ETFs is one of the catalysts driving the gains. Ethereum ETF inflows surpassed $320 million since July 7th, with BlackRock's ETHA dominating at a $5.06 billion market cap and capturing around $207 million in net inflows on July 9th. On the derivatives market side, Glassnode has also noted a rare occurrence where Ether's 24-hour futures trading volume briefly surpassed that of Bitcoin. According to the firm, ETH futures notched $62.1 billion in daily volume, edging out Bitcoin's $61.7 billion.
Instead of wild swings that keep traders on edge, Bitcoin's price has climbed with lower volatility, a trend that mirrors Wall Street's behavior, where the VIX, known as the fear gauge, typically drops during bull runs. Industry leaders have pointed out that Bitcoin reaching new highs while implied volatility falls signals a shift away from its usual pattern of high volatility and toward a more mature, stable market dynamic. This change is seen as a sign that the crypto landscape is evolving and aligning more closely with established financial markets. One factor that could influence Bitcoin's momentum is the upcoming release of U.S. inflation data on July 15th, which could introduce new risks or opportunities. As of this morning, Bitcoin is trading around $117,700, holding on to its recent gains. Meanwhile, Ethereum is also experiencing strong upward momentum, having surged above $3,000 after a robust second quarter. Institutional demand, especially through spot ETFs, is playing a big role in driving both Bitcoin and Ethereum prices higher. Since July 7th, Ethereum ETF inflows have exceeded $320 million, with BlackRock leading the way. On the derivatives side, Ethereum's 24-hour futures trading volume recently surpassed Bitcoin's, reaching $62.1 billion compared to Bitcoin's $61.7 billion. This rare event highlights shifting trader sentiment and growing excitement around Ethereum's ecosystem, as both retail and institutional investors increase their exposure.
The way my dad described to me is Bitcoin is the best expression of currency debasement. It's the best way to short the dollar. He's always talked to me about this portfolio that he's been trying to build, which is short dollar. He owns, historically, real estate is a way of short dollar, exchange stock. So owning the CME stock, owning the Chicago Board of Trade stock. The reason that that is short dollar is because if you live in a currency debasement era, everyone's a speculator, whether they know it or not. So exchanges are great businesses because everyone needs to buy a stock, buy a bond, buy something to avoid getting debased and things inflated out of their life.
CEO of Strike, Jack Mallers, shared that his father described Bitcoin as the clearest way to benefit from currency debasement, calling it the best way to short the dollar. He explained that his dad always aimed to build a portfolio that would gain value when the dollar weakens, using assets like real estate and exchange-traded stocks as examples. The logic is that in times when a currency loses value, everyone becomes a speculator, whether they realize it or not. Owning shares in exchanges like the Chicago Board of Trade or the CME, according to his father, is a smart move because, during periods of currency debasement, people flock to assets to avoid the effects of inflation eating away at their savings. He asserted that Bitcoin stands out as the best representation of this approach because it has a fixed supply and can't be inflated by governments or central banks. He believes that as the dollar continues to lose purchasing power due to money printing and rising national debt, more people are forced to look for ways to protect their wealth. In his view, this is why exchanges do well. Everyone is trying to buy something that holds value. Jack Mallers argues that Bitcoin offers a modern digital way to take the opposite side of currency debasement, providing a hedge against the risks that come with an era of easy money and growing financial uncertainty. To wrap this up, we throw you this question. Do you think Bitcoin can really hit $1 million anytime soon, or is this just hype? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.